Hello again, this is the second part of our fair binary options educational series dedicated to the accelerator indicator with the Bill Williams indicators. And like mentioned at the beginning of this project, if you go and click insert indicators and you look at the type of indicators that are being offered, besides the trend and oscillators, the classical ones, and the volume, you also have Bill Williams, and the first one in the category is the accelerator oscillator. We explained a bit what it means, and we explained a bit the interpretation on the first part, and now we're looking for plan how exactly to trade the oscillator, to trade prices. Whenever you trade, you look at the oscillator, then at an oscillator, then you gotta stick with the oscillator and not with price, as the oscillator always offers a better idea than price. So your analysis is not being done here, but here. We said that the first thing to do is to mark some levels. We mark the 0 level, and we want to see every time price is breaking to the upside or price is breaking to the downside in order to buy call or put options. You might say, okay, but what if it is a fake move? Well, if it is a fake move, then on the next one, or the next trade that you will take, is going to be more aggressive than the previous one, and the expiration date should always be calibrated with the time frame on the 4 hours chart. For example, if you have a 4 hours chart that price is breaking the 0 level from a positive territory to the negative, or from the negative to the positive, you are not going to trade 5-minute expiration dates, because it doesn't make any sense. Then of course another thing to look for is to look for divergences. For example, here market makes a series of 2 lows. So this is a low, like this. This is a low, and this one here is another low. But if you look at the oscillator, actually the oscillator is on the rising path, so it's not on the falling path. Like mentioned at the beginning, we always should stay with the oscillator and not with price. So this is a bullish divergence. So not only that it's a bullish divergence, but we need to look for buying call options. Where should we buy call option? On the first green candle that we have in the oscillator. So this one is the place to go and trade call options. And then by the time market goes from negative territory into the positive territory, then we could add to the position and so on and so forth, and we are able to trade this kind of a trend here. Divergences are extremely important, and it is a way to trade with oscillators as well. Another way to trade with oscillator is to find, based on historical prices, to find overbought and oversold levels, and these are being let's say identified by going back in time. So going back in time and look at these spikes in the oscillator, we see that this is a big spike in here, and this one is a big spike to the downside, and then market retraces. So something like this and like this will do the trick. So we should go and take 2 lines, one from here to here, and another one from here to here. And we can say with a fairly dose of optimism that this represents, or any move above this line represent an overbought territory, and we want to go and trade put options into overbought. And any move below this this line in here represents an oversold territory, and we actually want to buy and call to buy a call option on the oversold territory. So based on identification of these territories, we should go long here or buy a call option. And take a look, market already bounces. When the time it comes into the overbought territory, we should go and trade put options here, and again a put option, another put option in here, into that area, and so on. And then we have a spike into overbought. We want to sell it, and so on and so forth. In here, into the range, if you want, we are not applying the overbought and oversold theory, but we are trading with the move between the positive and negative territory, with divergences, and just like that, discipline and time frames will give you a positive outcome in your binary options trading. It is to remember that trading with oscillators is extremely rewarding, but you gotta have definitely a very good money management plan, and also you gotta have discipline and patience, and let the market come to you. And the expiration date should always be according to the time frame that the oscillator is being plotted. Thank you, and bye bye.